Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about VISHAY INTERTECHNOLOGY INC quarterly report. VISHAY Intertechnology Inc. offers a wide range of electronic components and services through its 6 segments: MOSFETs, diodes, optoelectronic components, resistors, inductors, and capacitors. The company's products include discrete semiconductors, passive electronic components, low and medium voltage trench-FET MOSFETs, high voltage planar MOSFETs, power integrated circuits, rectifiers, small signal diodes, protection diodes, thyristors/silicon controlled rectifiers, optoelectronic components, IR emitters and detectors, IR remote control receivers, optocouplers, etc., resistors for voltage and current regulation, inductors for magnetic field change, and alternating current resistance capacitors for energy storage and discharge. The company sells its products under various brand names, including Siliconics, Dale, Draloric, Baselag, S-Furnace, MCB, Ultrasource, Applied Thin Film Products, IHLP, High-Rel Systems, Sprague, Vitramin, Bari, Roderstein, ESTA, Ametherm, and BC Components. Its products are used in various end markets, including industrial, automotive, telecommunications, computing, consumer products, power supplies, military and aerospace, and medical applications. The stock price of VISHAY Intertechnology Inc. has dropped significantly over the past year due to several key events. The company's Q2 2025 earnings missed analyst expectations, resulting in a loss of 7 cents per share and a substantial decline in profitability. Additionally, the broader semiconductor industry faced challenges such as supply chain disruptions and fluctuating demand, leading to downward revisions in earnings forecasts and anticipated sales declines for 2024. These factors have collectively contributed to VISHAY Intertechnology's stock price drop, exceeding -12.26% over the past year. The primary drivers of revenue growth or decline is primarily driven by 3 key factors: increase in volume, foreign currency effects, and decrease in average selling prices. An increase in volume contributed to a 3.1% quarter-over-quarter and 7.4% year-over-year revenue growth. Conversely, the impact of foreign currency effects resulted in a 1% quarter-over-quarter and 2% year-over-year decline. Additionally, a decrease in average selling prices led to a -0.3% quarter-over-quarter and -1.8% year-over-year decline. These factors significantly influence revenue growth or decline, making them crucial for businesses to monitor and adjust their strategies accordingly. Net income and profit margins have undergone significant changes over the past period. While net income has improved by 0.6%, with a decrease from -2.6% to -1%, profit margins have experienced mixed results. Gross profit margin decreased by 0.2%, while operating income margin dropped by 1%. However, net earnings margin saw an improvement of 2.2%, rising from -2.6% to -0.4%. The decline in gross and operating profit margins can be attributed to higher tariffs, metals prices, and unfavorable foreign currency fluctuations. On the other hand, the increase in net earnings margin suggests that despite these challenges, the company's overall profitability has improved. The 7.8% revenue growth to $130.6 million also indicates a positive trend for the company. The company's debt level has seen a notable increase from $1.3 billion with no prior information available for comparison. Conversely, interest expenses have experienced fluctuations. In one instance, they decreased by $1.1 million in the fiscal quarter ended September 27, 2025, compared to the previous quarter. However, when comparing the same period last year, interest expenses increased by $2.9 million. Overall, these changes indicate a shift in the company's financial obligations. The company's financial performance varied across different segments and regions. The diodes, optoelectronic components, and inductor segments performed well, with revenue increases in both the current and prior year quarters, accompanied by stable gross profit margins. On the other hand, MOSFETs, resistors, and capacitors segments experienced a decline in their gross profit margins despite revenue growth. This was attributed to higher tariffs and metals prices. Management's outlook and strategy. The company's financial performance indicates a mixed picture. While revenue has grown, the gross profit margin has been negatively impacted by higher tariffs, metals prices, and lower average selling prices. The capacitors segment reported significant revenue growth, but its gross profit margin decreased due to various factors. Overall, management is facing challenges in maintaining profitability despite revenue growth. There are no recorded acquisitions. Additionally, there is no explicit mention of divestitures. However, an amendment to employment agreement suggests possible restructuring within VISHAY Israel, a wholly owned subsidiary, but this does not confirm a divestiture. There are no concerns about inventory buildup or supply chain disruption. The normalization of channel inventory and the end of excess inventory digestion suggest that the company has effectively managed its stock levels. Additionally, there is no mention of issues related to inventory buildup or supply chain disruption in the provided financial summary. This indicates a well-managed supply chain and minimal risk of disruptions. That concludes the financial summary for VISHAY INTERTECHNOLOGY INC. Feel free to comment below, and I will be happy to answer them when possible.